Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. In this recap video, I want to go over how we day traded ticker symbol JPM to get a nice return of 71% plus on the day. This was all done through the live Discord chat room, so I will show you guys the screenshots of the entry and exit messages. And if you want to join us, become a member of the CFO Swing Watch newsletter using the first link down below. Also, make sure to stick around to the end of the video to listen to some of the lessons that I learned from this day trade. Alright, so like in the other recap videos, there will be a white arrow to show the entry point and green arrows to show my areas of exit points for the trade. Let's get into it. So I initially began to look at banks this morning when both regional and mega cap banks looked pretty weak amongst the overall market bounce, especially the regional banks. And if you just compare the ticker for regional banks, which is KRE, so on this daily candlestick, to the ticker for mega cap banks, XLF, on this daily candlestick, you can clearly tell which one had the lower relative strength for most of the day. Now, since the regional banks have gone down a significant amount and we're at a risk of a potential nasty oversold bounce, I decided to keep my eyes on two mega cap banks. One was JPM or JP Morgan & Chase, and the other one was BAC or Bank of America. And so I decided to choose JPM to hone in on based on what the daily time frame was showing me. So during the time that I was watching JPM, the markets had already pushed up higher, comfortably staying near high of the day levels. And with the markets staying at highs, JPM was also staying near a daily level at $129 as seen right over here. Now this level is a previous level of support that had been broken already since this larger downtrend started. So I quickly made a game plan to short this name if we decided to break below $129 with a $1 stop loss. Now, based on the two previous daily candlesticks here, this one and this one, we were most likely going to continue lower because of my 10 SMA, which is the red line right here. And so we had this huge gap up on the first candlestick, which allowed the price to retest the 10 SMA as seen in the top wick. But it failed to remount it at the close as it closed below the 10 SMA. And the closing price was at $130.55, so below the 10 SMA at closing time. And then here comes the second daily candlestick to confirm that buyers won't be able to remount the 10 SMA by rejecting from the 10 SMA and moving lower until it closed out to form a very bearish daily candlestick with the long full body to the downside. So with this type of price action, I deduced that if the price can retest the 10 SMA again, it can most likely reject it once more and move lower. And if you take a look at the high of the day during this candlestick, the high of the day print was $129.53 as seen on the top left over here. And this happened to be pretty close to where the 10 SMA was sitting at on this day, which was sitting at $129.60. So it was only a couple of cents away from the 10 SMA. So this gave me more confidence to take this day trade once we saw the price hitting $129, threatening to move lower. Now, obviously, I didn't know it was going to turn into a day trade. I was looking at this to be a swing trade initially, and I'll get to the reasons why I turned it into a day trade shortly. Now, my $1 stop loss also made sense because the price reached $130 from my 129 entry point and over. That means we would be over this daily 10 SMA, giving the buyers a chance to stay over the 10 SMA for the rest of the day until the markets closed. All right, so with that bearish daily time frame analysis in mind, let's go down to my favorite time frame, the 15-minute time frame, to see where we entered and to see where we exited. Okay, so as seen on this very first screenshot that I'm sharing with you guys, we got in around 7:13 a.m. Pacific Standard Time using the 123 strike put contracts that expire on March 31st. Now, I initially thought this would be a nice swing trade, but again, I will explain why we turned it into a day trade in a couple of minutes. And so if we translate this rough timing on this message to the 15-minute time frame, you can clearly see where we got in right over here by this white arrow. And so again, this 129 level appears from the daily time frame, which clearly tells you that this level still mattered on this intraday time frame. And you can also clearly tell by the wicks of the two previous 15-minute candlesticks right over here that buyers have tried 2 times over the last 30 minutes to make the price stay over this 129 daily level. But once I saw that the price was also rejecting this 15-minute 200 SMA, which is my yellow line here, 2 times, I knew that we had to get in. Okay? So my contracts ended up being filled around the underlying share price of $129.10, while the premium of my contracts were filled in at $76 per contract. Now, after we entered, the overall markets, or SPY, SPY, continued to trudge on higher as it made new highs of the day, while JPM continued to be magnetized by this $129 daily level. And so we basically consolidated for the next hour or so. And as time went on, bank stocks started to lose strength as the overall sector was weak, while the markets were strong. But then, things turned around when the markets topped out near the high of the days and began to retrace the gains that it made since market open. And so this accelerated the descent, the complete descent of JPM's price action as seen here. And we began to look for areas to take profit. So as seen by the second screenshot here, I took off half at 35% plus right as the underlying share price was around $127.69. So as seen by this first green arrow. And after that first half was taken off the table, the market retracement accelerated and began to nosedive. So as seen by this price action over here. And so this quickly made me think that I had to get out the rest of my trade and officially turn this into a day trade, right? And this thought occurred to me because JPM had previously continued to stick to that 129 daily level on the daily time frame. And so on the daily time frame, if you go back, okay, the price for the last few trading days have been near critical support levels like 127 and 125.50. And I did not want to risk the fact that there could be a potential large bounce or bounces during this daily downtrend, in which I would not want to be a part of while holding onto this short position to the downside. So when the price began to close in on the previous day's low of the day, which happened to be at $127.08 as seen here, and also as seen on the 15-minute time frame, right over here, I decided to get out. I decided that it was prudent to use this opportunity to get the rest of my position out, the other half. And so as seen on this last screenshot here, at 10:28 a.m. Pacific Standard Time, we fully got out of this position while the underlying share price was oscillating somewhere around $127.15. And our premium for our contracts were filled at $130 per contract. And this gave us a nice return of 71% plus with a 1-to-2 risk to reward ratio on this day trade. Remember, our entry point was 129, and so we profited around 127. That gives us the $2 reward. And then our $1 stop loss was going to be if the price broke over $130. So that resulted in a 1-to-2 risk to reward ratio on this day trade. Now, obviously, there were more profits that I could have taken home on the same day as the price broke below this $127 daily and intraday level. And this allowed those same put contracts to gain even more, as it eventually returned 125% plus at the bottom of this intraday downtrend. So around here. But let me make this clear. No one, I mean not a single trader, is perfect during an exit sell for a trade to the long side or to the short side. And the market doesn't and will never care about where you exit. And so the big lesson on this trade, this day trade, for me was that I could have held until it hit my initial profit target of $125.50, especially if I had not switched my mindset for this trade to become a day trade from a swing trade. And as seen here on the daily time frame. Okay. This 125.50 level was the most recent pivot low point during the initial sell-off. And so there was a good chance that the price would eventually hit that level if I had held through and swung this trade, as the daily candlestick still looks bearish. But again, there's no point in dwelling in the what ifs, the shoulda, woulda, coulda, and future situations. We just need to acknowledge what occurred during the present time and move on to the next trade. Because if you can do that, you will know that there are still multiple opportunities on this single ticker JPM. Alright, that is it for this video. If you like what you heard, please leave a thumbs up down below. And if you're new here, check out the description box below for the link to the CFO Swing Watch newsletter. You can gain access to the current swing trades that we have right now and much more. Also, make sure you guys check out the other videos on this channel to continue your learning in trading. Thanks for watching, and I will see you all on another video.